price of energy is going to just be too much to continue at this pace and to do what we need to do, and Bitcoin's going to become basically irrelevant.
So this phantom coin out in the air that we can't touch or see or feel or go buy McDonald's Big Macs is going to go away?
It may not be working.
Oh, wow.
All thoughts and opinions shared in this recording belong to the participants. This podcast is meant to inform and educate and should not be seen as solicitation or endorsement for business.
Welcome to the Market Moment. This is Matt here with Lee.
Good morning.
And John.
Good morning.
You guys were talking about World Cup soccer. So what happened last night?
Ooh, big stuff.
Netherlands was upset by Morocco.
Yep. Okay. And it's not a huge upset. 2 top 10 teams. Very disappointing that they had to play in the round of 32 because those two teams should have met much later in the tournament. But 2 great teams. Morocco comes on top. But the bigger one, I think the biggest upset, or 4th biggest upset in World Cup history.
Was the Paraguay?
Yeah, Paraguay losing or beating Germany.
Yeah, I did see the highlights of that.
It will be real interesting to see, when all the numbers are tallied, what this did to the U.S. economy for this month and a half.
It's probably a big deal. I mean,
you have to assume a lot of those fans, maybe some of them live here.
Sure.
But
there's a lot of people coming in, though, to watch these teams.
Like the streets of Kansas City.
Oh, the Netherlands team.
Yes.
When's the next U.S. game?
Tomorrow.
Tomorrow night at 8 o'clock.
And we play
Bosnia
Herzegovina. And we're favored.
They appreciate you knowing how to pronounce the name of their country.
Yeah.
John went Bosnia.
Well, don't jinx us because it sounds like we should win, but
we should. And then the next game will be very tough.
Yeah, it gets
pretty brutal.
It gets pretty brutal after that.
Yeah. All right. Enough soccer. So today we're going to talk about earnings. Okay. He's going to talk about the market, the stock market, where it's at. From a price standpoint, what drives it. There's a lot of noise out there, things that you listen and see, and things that can be kind of spooky, and maybe help kind of lead to decisions that maybe you shouldn't make. And so today we're going to kind of take a step back and what really drives the market? What does the market care about? What has the market been doing, year to date, kind of right here at the halfway point after today. So let's jump in. All right, so we've got a bunch of charts we're going to dive through today. Let's start with, tied at the hip, stock prices and earnings growth. So this is this chart tracks the S&P 500 total return alongside the 12-month forward earnings growth since 2000. Over the past 12 months, the S&P has generated a total return of 22% with growth in 12-month forward earnings estimates of 32%. While short-term swings are driven by sentiment and noise, the long-term message is clear. Earnings growth is the engine behind stock returns. So this chart just shows you how correlated, right, forward earnings growth and stock prices are and how they move, lockstep with each other. And so it shouldn't be a surprise if earnings growth has been so good over the last 12 months, that we're sitting here at all-time highs.
Yes.
Thoughts
are I've been saying that forever. Like the market doesn't care as much about politics as we think it does. Doesn't care much about what the Fed says as we think it does. Those are like outlier big things that can happen. The war, Fed rate cuts or not cuts, whatever can create
volatility,
that kind of stuff. But the overall market, all it cares about is, are the companies strong or not?
Are they making money, and are they projected to make even more money in the future? If that's true, then...
And I think and we've seen that over the last 3 months with the war in Iran. And, I think so many people were expecting the markets to fall, markedly, and it just hadn't happened because earnings have remained very strong. And I think some of it goes back to AI. Let me back up. I think a lot of it goes back to the technology. Companies are becoming more efficient. They're able to control spending. And I think that, we're seeing that. I mean, profits and revenues are, across the board, not just tech stocks, not just this AI craze. I mean, it's retailers, it's, energy sector. I mean, it's just, the list goes on and on that companies are doing well right now.
They're doing well. And it's broadening out. It's not just, in fact, the Mag 7 stocks that had led the market for so many years are actually not the drivers right now. It's the overall market is kind of catching up.
And I've got a chart on that here in a minute,
which is awesome.
Well,
Last week, real quick, I think I mentioned that, there's some signs that this reminds me of 2000, right? The tech stocks are getting a little frothy and all stuff. So I did a little deeper dive into that, and I was wrong. The 2000 market versus this, there's not very much correlation right now. And that time frame, you could put any name, .com on any name, and it would be IPO'd and be overpriced, and that created a lot of not producing, no revenue generated companies that all fell at the same time. This market is not like that.
No, I mean, markets or companies that are not performing, even big name companies that are not hitting their revenue numbers, that are not growing and are not as profitable as they once were, they're being punished. And so, the market is, in my opinion, treating companies
acting correctly.
Yeah.
Yeah.
You mentioned a second ago, the broadening out, and I think Matt is going to talk about this here in a couple minutes, but the Russell 2000, which is kind of a measure of smaller companies, I mean, they're up 22% year to date. I mean, that's more than double the S&P, the Dow, the NASDAQ. And so, that speaks to this broadening out, that it's not just the Mag 7 or the big companies that are doing well.
Which is healthy signs.
Well, while we're talking about that, since you guys keep going back to it and getting things out of order. Yeah, let's look at it. So this is illustrating the Mag 7 outsized impact on the S&P 500. So this has kind of been the story for a while, but this shows year to date. So this chart illustrates how each of the Mag 7 stocks have individually contributed to the S&P's year to date price change. It breaks down the index's move from starting value of 26 through today. And you can see that, the other 493 here make up essentially all of the year-to-date performance, right? Microsoft, Meta, Tesla, some of these names are down. NVIDIA, Google are up, but not enough to really move the needle, when it comes to the total index. And so when a small number of stocks represent the outside share of an index, their performance can have disproportionate impact on overall returns, both to the downside and the upside. And we've seen this, as you guys were mentioning, we've seen this rotation out of, hey, all of the price returns have come from, or index returns have come from these top 7, 8, 9 companies. Yeah. And that hasn't been the case here today.
No.
Right? A lot of these companies are actually kind of in a drawdown, which kind of on the next topic makes a lot of sense. I was trying to find a chart here. We'll put one up on the screen. But it shows the free cash flow from the hyperscalers and how it's fallen off a cliff because they're spending everything.
Yeah.
Right? Their CapEx spend is so just crazy relative to what it was a few years ago, that where they were so healthy, had so much free cash flow, and now they're basically spending everything that comes in. And so it makes sense. Like, this is a good, like, the market has adjusted for that, and they're not being rewarded in the same way. Right. Because they're like, hey, you don't have all this free cash flow to spend on future projects. You're spending it now. And so we're going to kind of, re-rate you a little bit and not give you the same multiple or the same, have the same expectations moving forward. Now, if that spend starts to produce, they'll be rewarded.
And in the past, it has, for some companies.
Well, I mean, look at chip makers. Chip makers have been floundering for a long time, and this year to date, they're just destroying it. The chip makers have moved up, have been a big part of the new move out of the Mag 7, if you will. Mm-hmm. And they have been kind of in that same boat where they spent years ago. Now they're starting to show signs of greatness again, getting back into the fold where the Mag 7 stocks, like you said, they're going to have to prove it.
Yeah. Yeah.
I think it's healthy for the market. I like it.
Yeah, there's a lot of good things. As much as, it's easy to fear all-time highs. Right? You think all-time highs, you hear that what goes up must come down, all this stuff. And so you say, hey, all-time highs, it must be about to come down. We must, and that's very kind of just human nature and easy. But when you really dig into kind of what's going on in the market and who the winners are and who has performed and who hasn't, it does make sense, which is kind of nice, because there's times where that's not true, where you're like, you can't make sense of it. And that's when you really start to get worried.
I saw this statistic yesterday, and then I was just reading an article that mentioned it. But something happened last week for the first time in 26 years. Last week, the S&P 500 was down 5 straight days. Every day last week, the S&P 500 was down, while more of its individual stocks were up than down. So, I mean, that just shows that, you got some churning in the markets. Now, we've had a good first half. I think we're going to need some help in the second half. I think that some of the big names, some of the names that you mentioned, Matt, that are down, year to date, I think in the second half of this year we might need some help. We'll see if earnings can continue to perform well.
Well, and we still have this this elephant in the room, the Iran war that never seems to get solved. Right, when it's solved, then somebody bombs something or whatever. It never seems to get kind of through, and that Strait of Hormuz still seems to be an issue. So inflation could linger and linger, could start to eat into stuff. That's my concern.
Yeah. Let me ask you a quick question as it pertains to the markets. Do you think the markets, at what points do you think the markets just stop caring about what's going on over
Maybe
there?
they already have. It's like it's built in. So I'll tell you a couple of things, positive things. When this type of stuff happens, Strait of Hormuz, one thing I've been watching and following, which I think is awesome, the other parts of the Middle East that aren't Iran, right? They're starting to put plans together to find different ways to get oil out of the area, right? So they're upgrading their pipeline. I just saw Saudi Arabia is pumping oil out of the pipeline to a different way. All these are great things, right? It takes the pressure off of 20% of the world oil having to go through there. So this is going to create where maybe only 10% of the world oil, when this is solved, and it's not as big a deal anymore. So I like the idea that that countries are starting to make plans to adjust around it, where it's not going to be we're all just waiting on this thing to get solved. It's and if it doesn't, everything's going to end. That oil flow. So I like that, but I do think maybe we're kind of falling asleep. Not falling asleep, but just it's.
I honestly don't think
whatever it is, it's done.
And I don't want this to come across the wrong way, but I think when you're just looking at the stock market, I mean, why would the stock market care? Because when you go back over the last 25 years, 30, I mean, when have we not been in a
in a conflict,
some kind of a conflict geopolitically, or when it's even if we're not directly involved, we're indirectly involved. I mean, there's like very few times where we're actually not involved in a situation,
100%.
and so I think you get to the point where just from the market's perspective, unless there's just some outrageously volatile situation that's way beyond what we're kind of accustomed to, just the fact that we're in this war and this conflict, I don't think is enough for the markets to be like, yeah, this is really going to change things.
It's similar to, several years ago, Russia, Ukraine, when it happened for the next 3 or 4 days, it was like, oh my gosh, and all the grain and all those.
The
food coming.
The fertilizer that came from Ukraine was like a big deal for farmers and so on.
And now
somehow that's been faded out.
And it's just kind of ho-hum. We're 5-6 years into this, and to Matt's point, to the people over there that are suffering, that are absolutely
And I don't mean to like belittle it,
but from a market standpoint, to your point, when have we not? There probably hasn't been a rolling 3-year period in my lifetime that there hasn't been a decent sized conflict somewhere in the world.
Well, and this is the thing. What is the 1 year that we've had in the last 10 that's been negative? It's 2022. And why was it negative? Mainly because of hyperinflation and then the Fed raising rates really aggressively. That's the only thing, and I don't think it's that big a deal anymore. I think they're going to squash this. The crude oil is coming down, so it's not as big a deal. That was my big concern, was the inflation lingering on of higher prices due to not America, but other countries relying on that oil having to raise prices because their prices went up. But it doesn't seem like that's, oil's starting to come back down, and it seems in order. One thing that's very interesting that we don't talk about at all, gold is down 20%.
Yeah, gold and silver
short
both sold off
big time.
Big time.
And we don't talk about it.
Bitcoin sold off big time.
Yeah.
Yep.
Like,
So places that you would think money would go if there were fear of market, money's flowing out of that.
yeah.
Interesting side note.
Yeah, I started to see, not to go down this, I don't want to get too deep into this, but I've seen several headlines. Jeremy Grantham the other day I think it was Grantham, had an interview. He's talking about how Bitcoin was going to slowly dwindle down to zero.
Oh, wow.
And be worthless. And And then there was another interview. I forgot who it was. Whose guys basically saying the same thing. Like the price of energy is going to just be too much to continue at this pace and to do what we need to do. And Bitcoin's going to become basically irrelevant.
So this phantom coin out in the air that we can't touch or see or feel or go buy McDonald's Big Macs is going to go away?
It may not be worth anything.
Oh, wow.
Just think of these athletes that, a few years ago were getting their salaries paid in Bitcoin.
Yeah.
Well, if they sold out by now, maybe they're good.
Oh, yeah. I mean,
right?
There's been so many fortunes created. But it just goes, it's like, investing over the long term is just hard.
It is.
Like, it is hard because short term, medium term trends, as valid as they may be in the moment, like how that can change so quickly, right? And as quickly as fortunes can be won and made, they can be lost even that much quicker.
There is nothing wrong with boring.
No, there's nothing wrong with boring.
So
I agree.
Last couple charts, actual earnings trends. So this is showing a breakdown of large cap versus mid cap versus small cap earnings trends. So just going to show what we were just talking about, earnings trends have been moving up and to the right. And then Lee mentioned at the beginning of the podcast about small cap. Where is it? Small cap earnings. So this shows historical drawdowns in trailing 12-month earnings per share for small caps compared to large caps. So you can see the small cap earnings were in a pretty significant downtrend starting in 22 through 23, 24, 25, and then kind of late 25, early 26. We've seen a pretty dramatic recovery in small cap earnings, which has led them to be the outperformer in the market. So,
and if rates can stay down, then I think you'll see it continue.
Yeah, and this was a pretty.
I like
the last couple of years was a pretty historical. You can see it in the chart. It's kind of the large cap earnings is pretty light, so it's kind of hard to see. But you can see historically going back to 2000, they move pretty lockstep, right, in the same direction. But since 2022, large cap had hung in there and hadn't seen a big drawdown, but small cap had. So there had been this big divergence between, where earnings were at for small cap versus large cap, and small cap has closed the gap.
Close the gap, which is a good healthy sign.
Well, and some of it is they're just catching up.
Well, if you go back 100
the fundamentals
years,
are good too.
If you go back 100 or go back 20, this is where you can look back and make any chart look how you want it to look. If you go back 100, the small cap stock has outperformed large cap by a large margin, right? If you go back 100 years. If you go back 20, large cap has outperformed small cap.
Yeah.
But the market always kind of moves. It ebbs and flows, goes back. It's good to see small cap getting back into.
Well, and this is why long-term investing can be so hard because, I'm not saying like, hey, small cap's going to dominate for the next 5 years at all. But for every investor who's alive today and in their investing prime, their primary years of investing have been in the 2000s, 2010s, right? Where large cap has outperformed. So it'd be easy to say, the trend towards just buy the S&P 500 and that's it.
Right.
Well, like to your point, if you go back over 100 years, small cap has outperformed. What if that trend flips and you're sitting here holding a bag of, hey, all I own is S&P 500 large cap U.S. stocks.
Sure.
And they don't do well for the next decade, right? And so,
do you know what the number 2 returner is the last 100 years? International stocks, non-U.S. That makes sense. But again, that's one that's been underperforming. Yeah, and they've been great year to date, and they've underperformed the last 20.
Right.
So to your point, you could have been out of small and out of international and done really well and believe that's the way you could keep going. And I've heard, how many times have you guys heard people come in and say, just buy VU.
Yeah.
Just buy the S&P 500.
Now, this could revert back, right? We could still be in a trend of where, hey, this was just a very short period of time. But we could also, you could look at periods of time where these have lasted longer, right? Where small cap, mid cap, international has outperformed for a little longer period of time. And so, building a portfolio is something that you can stick with long term, that can kind of ride through the good and the bad, the good markets, bad markets, is actually harder than a lot of people think. I think the moral of the story or today's conversation is, earnings drive markets. Drive price. The market cares about, like I said earlier, are companies making money, and do we think they're going to continue making money and be able to grow earnings moving forward? And if that's the case, outside of maybe some volatile things in the short term or so, typically the market rewards that and price will move higher.
Yes.
And that's kind of a breakdown of what we've seen working and not working this year. Companies have been rewarded and those that haven't shown earnings growth, or big companies whose free cash flow has been taking a huge hit because they're spending so much on CapEx and AI. It's great, but they haven't been rewarded over the last 6 months, right?
If you go back a year and you just said that the Mag 7 plus some of the other high flyers like Palantir and some of these companies would come down 25, 30, 35, and in Palantir's case, 50% from its high, I would not think the Dow would hit an all-time high, the S&P and NASDAQ would be close to all-time highs.
Right.
You wouldn't think that, right? But that's a positive sign for the overall health of the market. So
It reminds me of a line from the musical Beauty and the Beast, a tale as old as time. Earnings matter.
Earnings matter.
Now, earnings matter is not the line from Beauty and the Beast.
I remember I was trying to think which character said that.
I'm going to have to go back and listen to that and see if I can make sense of that.
A tale as old as time. Earnings do matter when
so
it
what's,
comes to performance.
what's from Beauty and the Beast? A tale as old
The line, a tale as old as time.
time. Can you sing that for us?
Nope.
He
But John
can't
was about to.
Yeah. All right. Any parting thoughts or words of wisdom?
No, hope the viewers, the listeners can't appreciate it, but the viewers may appreciate our new podcast table.
Yeah.
Yeah.
Got a new table.
Where did you get this table again, Matt?
Probably can't say it because that would be advertising.
Oh, yeah, that's true. It was very, very cool place that he found this. I just wanted to say that. But, yeah, we're happy to be at the new table. World Cup soccer, go U.S., right? It's 4th of July. I mean, hey, guys.
4th of July,
It's 4th of
250th
July.
anniversary.
250 years.
You know, there was
Crazy. Think
It's a
about
big deal.
There was some rumors, which it's not happening, but there were some rumors that the U.S. would play England on July 4th in the World Cup. But
It's not going to happen,
not
but
gonna
that would have
happen.
been
That'd
fun.
be kind of funny.
That'd be kind of fun.
That would have been funny.
I wonder if, nobody's alive, though, from back then, so they wouldn't.
I would think not. But 250 years ago.
No, 250 years. Haley's got me reading like Independence Day, 4th of July books every night at dinner to the kids. And she's, I'm like,
Are y'all going to watch Independence Day, the movie with Will Smith?
Yeah, I just
Probably
watched
not.
the Will Smith movie. That's
like-
that's nothing more American than that.
yeah.
Well, we hope everyone has a safe and fun holiday weekend.
Absolutely.
So,
yeah.
Yes.
Proud to be American.
absolutely.
Live in the best country in the world. So
Go USA.
grateful for that. All right. Well, as always, we appreciate you guys watching and listening. Be sure to check out Eli's data brief. Got a new video coming out soon, so be sure to check that out. Shoot us an email, give us a like, subscribe. We appreciate you guys, and we'll see you next week.
The hosts of the Market Moment podcast are employees of Mach 1 Financial Group, LLC. Mach 1 is a registered investment advisor located in Rogers, Arkansas. A copy of Mach 1's current written disclosure brochure is available through the SEC website and available at disclosures.mach1fg.com.